Welcome back to the podcast, guys. Today we're going to talk about how to put yourself in the position to have the most success in your trading. Should you work on your strengths and strengthen them, or should you work on your weaknesses and bringing them up? We're going to discuss maybe a controversial take on that. Now, before we hop into things, I want to remind you guys, we have a free online trading workshop coming up in November. I know that's a long time from now, but wanted to put it in your atmosphere. I don't know if that's the right word now, so you don't forget. End of November around Thanksgiving, a free online trading workshop. So mark your calendar. I'll continue to reach out with like dates and names and stuff like that once we get it all done. But wanted to give you guys the heads up because you are insiders as part of the Trading Coach Podcast Mafia. Yeah. Anyway, let's hop into the episode. I'm sorry. It gets frustrating sometimes, guys. It's we deal with the same issues over and over. I'm dealing with a chat where it's like every time this trader doesn't see something the same way as me, I feel like it's a fire. And it's like, I'm wrong. And I'm like, we're not going to see things the same way each and every time. Like you shouldn't expect to see things the same way as Jason or myself or Cody or whoever. Like, you want to be consistent in how you see things. And we're dealing with a question where it's like, well, yesterday I saw a pattern like that and you said that wasn't a double top or a double, I think it was double top. Yeah, but today on the euro dollar, this one looks similar, but you did see it as a double bottom. What am I seeing wrong? And I said, well, I don't see them as the same setup. The one you showed me yesterday, I saw that completely different as the one I see today. That's why one is valid and one's not valid. And now the trader is kind of flipping out over like, well, now I'm confused because this was valid and this is not valid, but I saw that the same. But I'm like, well, I didn't. And the whole point is that you saw it the same. Yes. So you should look at them the same way. Either they're both valid or both invalid. But I didn't see them the same. I saw them as differently. And that's why one was valid and one's not valid. And it's a discussion that will never have an end. But because this trader lacks confidence and it's like, well, I'm doing something wrong. And it's like, no, these are subjective, right? This is discretionary trading, right? They're like, I can't even explain why I saw it differently. I just did. One I saw open space, the other one I didn't. Like, it's subjective. Like, that's the subjectivity. Give me a second. I want to type this in. I think we're discussing in the live room, and I think that I hope this isn't too loud for you. Subjectivity of trading, of price action trading may be too much for you at this point. It may be worth exploring a more mechanical and systematic approach where everything is either black or white. I think I think we're at that point right now where, and it's not a negative, right? Price action trading is hard. I told you guys my story. I started off as like a discretionary price action trader and I failed miserably because like I couldn't trust myself and I had no consistency. So I went to the mechanical side, and I also didn't like the mechanical side for other reasons, but price action trading only went to, well, aside from like, well, I went to patterns in between because that was pretty much the most mechanical, the least subjective price action trading approach that I can take. Obviously, there's subjectivity in the impulse legs and mainly the impulse legs, but all the legs as well. But in comparisons, like other price action trading, like flags and wedges and stuff like that, patterns were the most rules based because it was like, okay, X leg, got to get that out the way, but like B leg needs to hit here, C leg needs to hit there. So it did take me a while to earn that experience in the market to be able to trade the way I am now. But understand that if you're someone that some people love it. Some people love discretionary trading. They love the subjectivity. They're more art based, and they're like, man, I can, I can't explain it, but I can see it. I can feel it. And I have rules to keep me in line, and I get it. Some people, it flips them out. Some people with like a very mechanical approach, right? Jason Grayson was very similar to this. Like, they can't allow themselves to have that freedom. And this is part of knowing yourself as a trader. And this is where you have to find an approach. You have to find an approach that best suits you. Right? And maybe a mechanical approach is best, at least starting off there, where it's like black, white, there is little to no, I have little to no kind of subjectivity in my approach. Something we spoke about yesterday with the systems, where it's like we're looking at what the SSL and whatever indicator we're using, the RSI. Was there any subjectivity in that? Was there any discretion? Was there any analysis? No, it was like, when this line crosses and blah, blah happens, then I do this. And there's no if, ands, or buts. Or even if you're going to be a pattern trader, something like Enigma, where it's like, okay, I'm going to take every pattern that Enigma gives me. No if, ands, or buts. Stuff like that is mechanical. And you may find that that's the better fit. Or you may find that at least it's the better fit for you at this point in time, until you've developed enough experience in your trader's eye to kind of be confident in yourself, in what you see. Because confidence is everything. It's amazing. It's like it's no different in sports, right? When you're confident in sports, like, we use the basketball reference. When you're confident in sports, man, that hoop is like 20 meters wide. Like, I've had times where I've caught fire. It's this out of body experience, and I'm just like, it is a swimming pool, and I can just throw it up and it'll go in there. When your confidence is gone, that rim is the size of a coffee cup, and the perfect stroke will just bounce out. And then when you bleed confidence in that aspect, right, then you start hesitating. You don't want to shoot anymore. You're afraid, right? And then the rest of your performance suffers as well. So we have to put ourselves in a position where we have maximum confidence to succeed. And then as we succeed at one thing, you'll start to gain confidence in another thing just by experience. So, but that's the part of figuring yourself out as a trader. You got to figure out, what am I comfortable with? What am I not comfortable with? What am I good at? What am I not good at? What am I bad at? What's my philosophy, right? It could be as remedial as like, I believe in trend trading. I believe in counter trend trading. I believe structure is awesome. I hate structure, right? I believe in indicators. I hate indicators, right? Day trading, swing trading, all these little decisions, we have to find out, where do we lie, right? If this is a dot chart, right? Where do we lie between all of them? And what situation is going to set us up to have the most success? Do I need to trade Bitcoin on the minute chart, or am I going to go crazy? Am I comfortable enough trading off the daily chart, knowing I can go weeks and months without a trade, or will I go crazy? Am I confident enough to identify a double bottom consistently, or am I going to question myself and flip out? Right? Find out what makes you tick. Find out your strengths and weaknesses. Move towards your strength. Right? I was always, this is similar to coaching sports, where coaches always used to say in coaching sports, right? Every athlete has strengths and weaknesses, right? Your strengths are your ceiling, your weaknesses are your floor. And for the longest time, I always used to hear like, oh, you want to work on your weaknesses, right? Work on your weaknesses and raise your floor. No, work on your strengths first. Work on your strengths. Right? Find out what you're good at and get better at it. Because 9 times out of 10, even in business, right? 9 times out of 10, you can avoid your weaknesses. It's crazy to think about, but it's true. I remember hearing, I think it was Henry Ford. They asked Henry Ford, right? They're like, how do you manage like the bandwidth of dealing with everything that goes on in your company? And he was like, I don't. I know what I'm good at, And you see all these other people. This was an interview like during a board meeting. You see all these other people here. Guess what they're here for? They're like, what? I hired them to be great at the things I'm not good at, so I don't have to be. Right? So if Lynn sucks at day trading, does Lynn need to work on her ability to be a day trader? If she's really good at swing trading? No, F day trading. Get better at swing trading. You don't need to do it. Like it's that simple. We can avoid our weaknesses. I know it sounds weird, but find your strengths, focus on your strengths, get stronger at your strengths, raise that ceiling, and avoid your weaknesses. You don't need to work on them. You don't need to be a well-rounded trader that does a million things. Get really, really good at one thing. And being really, really good at that one thing will bring you money. And that's all it takes in trading. All it takes. Hope you guys enjoyed the show. Hey, show me some love. Leave this podcast a rating and a review if you haven't done so already. It takes like a minute of your time. Just go ahead and click 5 stars and say something nice. It helps out the show. It helps us grow, and it allows us to keep coming up with new awesome episodes of the Trading Coach Podcast. So I appreciate it in advance. And until next time, plan your trade, trade your plan. See you at the workshop.